DW World welcomes you back and join us. Today is the 18th March, year 2020, and I'm going to cover on the FTSE, STI, and dollar Sing. All right, dollar Sing stands for US dollar versus Singapore dollar exchange rate. Well, for the last 2 weeks, we have done a lot of coverage on US Dow Jones, US dollar index, crude oil, and gold prices and the intercorrelationship. We even did one Chinese podcast on the US-China trade war. However, over the last few days, we have received a lot of queries and emails from traders in Singapore and among our friends that they were asking us whether if we could do a coverage on the FTSE STI, which is the Straits Times Index in Singapore, as well as the dollar Sing trend. Okay, the reason is we really have not been looking a lot at FTSE STI. All right, my apology, but then again, since there's such a request, we shall do a coverage, and at least we let our Singapore traders know, if they are going to start picking a bottom now for a potential reversal, or if they're going to turn the position into shorting for a deeper bottom. Then for the dollar Sing, of course, we have a lot of international traders who have been using US dollar versus Sing dollars to purchase goods and to export goods in order to complete their businesses. So today we're going to cover on these two special topic on FTSE STI and dollar Sing. All right, stay tuned and don't walk away. Well, as you can see, we are now all looking at the FTSE STI index, which is the Straits Times Singapore. All right, if we look at the day chart, let us start off with the day chart here. All right, from the recent top 2018 May. Okay, let's put this as the point X, all right, the top. And we could see here from the day chart, okay, this is a day chart, that the market has come down and formed a wave 1, or we call it wave A, the first wave, which reached the bottom at 2959. Okay, on the right hand side, there's a price scale. Okay, correct, about 2950. And the market actually retraced back to form a wave B, which was on the April 25th this year. All right, then the next thing is the market actually started to drive down and forming a wave C. So probably we are looking at a market wave C still moving down, and how far can it go? All right, before we go on to show you the month chart, all right, this is a day chart. If you look carefully here, all right, the purple channel that I have put up here actually connects the top part of the trend and pulling a channel right to the bottom. Okay, for the first interpretation, the first thing we see here on the chart is that the market has broken down below this channel and probably will be going lower. All right, and this is going to become a very strong resistance at 2660, 2660, whenever the market comes back up in the near future. Okay, the second analysis that we are looking at this day chart is here at the top. Okay, this purple line here that runs across the day chart actually is the EMA 200, or we call the exponential moving average 200 days. All right, and we see a triple crossing here with the EMA 4, okay, for the average, the EMA 20 days average, and the 20 days, and the EMA 200 days average, 4, 20, and 200, which actually gave rise to a very, very strong waterfall coming down trend. Okay, from the day chart itself, let us take a look at the month chart. Okay, which this is the monthly chart, which could be more visible. All right, if you look at this bottom, okay, this bottom at about 2,520. All right, look on the right side for the price scale. Okay, the first time when the market came down here was in 2011 October, and the market bounced up. And the second time the market tested here was sometime in January 2016. All right, and this is the third time which the market has broken on this very strong support line, and we are still doing on the wave C down. All right, so how low can it go? Let us pull a Fibonacci retracement, all right, from the top, let's assume, to the bottom here. Okay, let us do it one more time. Okay, if we are looking at here, let us do some cleaning up here. All right, let's change to 0.33 and two-third retracement 0.66 and do away the 1.618. Okay, let's take a look at this. All right, all you can see here is from the top, okay, on the money chart to the bottom, and let us stretch across here. Okay, a 50% retracement happens to be at 2,680, which has the market has broken down beyond that. Okay, and now we are at the price of 2,420, and it looks like we still have a little bit room at the bottom here for the market to retrace on the two-third 66%, which coincides at 2,300. All right, 2,310, or we just put a large figure at 2,300 from the top to the bottom here. So to finalize on this FTSE Straits Times, all right, we are looking at 3 waves down. Okay, 3 waves down, the X starting point with an A and a B and a C, and we still have a little bit of room at the bottom, and most likely the market is going to test 2,300 points before it bounces up in the near future. And the next thing, probably when the market bounces up, we are looking at a 50% retracement of the whole wave down from the B to the C here, all right, which is going to be about 50% at anywhere around 2,700 points. 2,700 points will be confluent to this EMA 200 averaging line on the monthly chart, which is going to act as a very strong resistance. So if you ask me, what are we going to do, okay, to FTSE STI, okay, my analysis is it is still going down, quite bearish, but it is near to the bottom, and very soon, perhaps sometime this month, this is a monthly chart, okay, if this is March, so either March will finish out the bottom, or April there will be an initial pull down and start to reverse, and the whole sideways correction will probably last for a couple of months and move back up to 2,700 points. So this is the summary forecast on FTSE STI in Singapore. So when Singapore stock index is moving down here and trading in very weak demand, naturally Sing dollars will be weakened as well. All right, let us take a look at dollar Sing chart, okay, and give you an outlook on how the market runs. Okay, as you see that the Sing dollar has been weakening against the dollar. Okay, this is a chart on the US dollar as the front currency and Sing dollar as a counter currency. Okay, as I mentioned earlier in the part 1, there are a lot of friends who are doing international trading on import-export businesses. They have been coming to me and say, wow, they have been suffering very big pressure because they need to pay US dollars in order to buy foreign goods for imports into Singapore. And the worry is how far more can US dollars strengthen, which will eat into their profit. Okay, if you look at this day chart, let us, same thing, we start off from the day chart here. All right, this is the starting point X and an A. Okay, wave A finishes here, and the wave B pulls down to 1.37. Okay, wave C. How far is the market going up, and is it still going to go up? The first analysis, I'm going to quickly just give you one tip. Generally, all right, if you look at this 3-wave formation, wave A and a B and a C, if you take wave A from this X to A, all right, which is going to be equal to wave C. All right, so wave A has started from 1.3450 and finished at 1.40. That's about 550 points. Okay, and wave C, if you actually add up from this bottom at 1.37 plus 550 points, and that is going to be 1.34, or sorry, that's going to be 1.43 or 1.44, which means we are almost hitting the top now on the day chart. Okay, let us turn into a monthly chart and take a look. Okay, as you can see here, the monthly chart. All right, this is a month chart on dollar Sing. Okay, on the bottom, when we started point X, okay, if we look at the month chart, in fact, that had another bottom sometime in 2019 January. That was last year, and this will form a very strong support when it comes down again in the future. All right, that will be 1.34 half. Okay, 1.34 half. Sorry, and going up on the top side, previously we had a very strong resistance here formed in 2017 January. Okay, and it is somewhere near to the top, 1.4530, 1.45. So this round, if you are looking at a month chart, definitely we are looking at a continual small little room on the top side, which is going to hit 1.44, okay, or 1.45. In fact, from the day chart, when we calculate the wave A equal to wave C, anywhere near to 1.43 to 1.44 is being toppish now. All right, it's being toppish. So for those friends who are doing international trading, that you need to spend a lot of US dollars to import foreign goods. All right, stay on, bite the bullet, and be patient. All right, dollar Sing is going to reverse down probably by end of this month or in April. All right, of course we put a disclaimer on that, but looking at the chart pattern, dollar Sing is reaching on a very toppish formation now, near to 1.44, 1.45. That is going to turn down. Okay, what I'm going to do next thing is I will put up this chart, okay, of the STI and dollar Sing, okay, day chart. All right, and I will put the label and put some annotations for you to refer. All right, and for you to perhaps refer on this chart and study deeper for the whole month of March. All right, meanwhile, the last thing to do is, as usual, three things. Number one, if you think today's podcast has helped you and you like it, do us three favors. Number one, drop us some comments. Tell us what you want us to cover or what you want us to talk about that can help you in your perhaps trading career. And of course, like us. And number two, please subscribe to us and don't forget to do that. All right, I always say that because if you do not subscribe, I will be scrapped soon by the producer. And number three, of course, share this video, share this podcast to the people you care about, your family, friends, colleagues that you think perhaps they are trading on the FTSE STI in Singapore, or they have been involved in some international trade that is evolving around US dollar Sing. All right, so stay tuned with us, come back again, and once you're subscribed, you'll be always be prompted, okay, whenever we upload a new video. All right, I'll see you again. Thank you very much. Have a good day.